Nobody wants an HMRC investigation, but they're getting more and more common as HMRC looks to clamp down on tax avoiders. As well as being bad news for the likes of Jimmy Carr and Take That, this also has an impact for ordinary taxpayers and business owners like you and me. After all, we haven't got the money for a fancy lawyer to defend us. I'm Jon Davies, and I'm going to help you avoid having HMRC turn up to look over your accounts. Now, the best way to actually avoid an investigation is to understand what HMRC look at. To help you, I'm going to go through our top 5 causes for investigations. The first is private expenses. HMRC doesn't allow private expenses to be claimed by a business. An expense must be wholly and exclusively for the benefit of your business. The second one is private proportions. Linked to the above, HMRC look closely when you've allocated a proportion of cost to your business, for example motor vehicle costs or household bills. Sometimes it's safe to use HMRC's approved flat rates for expenses for household bills if you do work from home. The next thing is travel costs. HMRC wants to see detailed records of any travel expenses you have, so make sure any mileage is logged with details of the trip. Receipts are kept for any other travel expenses, for example rail tickets, and make sure the dates agree to your calendar because they do look at that if they investigate you. Next was employment status. Are you actually a business? Or are you really an employee? This is particularly relevant for contractors and consultants. HMRC would prefer you to be classed as an employee as it leads to national insurance contributions. Therefore, they look to argue that contractors or consultants who work for one client for long periods are actually employees. The rules on this, known as the IR35 legislation, are being constantly updated, so it's worth checking your status. The next thing HMRC look at are loan accounts. For example, do you have an overdrawn director's loan? This means if you've taken more cash from the business than is available, i.e. more than the profits after tax. And were dividends correctly paid? If not, HMRC can treat the cash as a salary and ask for PAYE and national insurance on that. Now, as you can imagine, there's a lot of detail to be considered for each of these, so please do get in touch if you have any queries. We can do everything we can to keep your tax bill down legally. We know the rules and we keep your bill down by using tax allowances, tax efficiencies and by planning in advance to keep HMRC happy, avoid investigation, and if by any chance you randomly do get one, to make sure that you're clean and pass it with flying colours. Thank you.